So much to talk about in this December rates announcement. Firstly, we'll start with interest rates on hold. The Reserve Governor and the board met and they've kept rates on hold. Now, what's really fascinating is if we had waited another day when our GDP numbers come out in Australia, we could have seen a different result. You know, there's so much going on both domestically and also globally that it does put a lot of noise and cloudiness around what's going to happen with rates into 2017. In my previous November rates announcement, I said that interest rates would most likely be on hold throughout 2017. Now, we've got some economists who believe that there is going to be further rate cuts, and they think that we could potentially have a negative quarter of GDP, which we find out tomorrow. And there are other economists who believe that we'll have positive growth, which could lead to interest rate increases in 2017. Now, we couple this with a couple of interesting things that are going on globally, such as Donald Trump being elected to the next president of the United States of America. Now, we have seen the Fed Reserve make the call on their interest rates in the next couple of weeks, and we will see interest rates increase in America. And that's on the back of the economy is actually doing quite well. We have seen strong jobs growth, which has obviously meant that the unemployment rate has continued to fall. So we will see, again, more of those interest rate rises potential in America. Now, there are some challenges. You know, Donald Trump has come to power on the back of making America great again, which effectively means let's start building things back in America. And so they've got this protectionism policy, which has meant that middle America, in terms of the steel belt, is going to be quite important in terms of, and that's effectively how he got himself voted in. So what does that mean? It means that we're going to see big infrastructure programs happening in America, and that means more spending. And the other thing he also promised was tax cuts to bring the big multinationals back in to pay their taxes, their profit taxes back in America. So it really is quite interesting in terms of that play, because we already see a country has an enormous amount of debt. So I'm not quite sure how lowering tax rates will basically reduce the tax revenue that the government's going to receive, and then going on a spending program. So it's going to be interesting times to see how that plays out over the next couple of years. We also look now to Europe, and we saw that over the weekend, Italy went to a referendum to look at their actual constitution in terms of how they vote. You know, Italy has had effectively a lot of unstable government. I think it's over 60 different governments in around 65 years. So an incredible instability in that point. But that vote has actually been voted down. So it means that the current Prime Minister of Italy is more than likely going to resign now. And that will then cause all the challenges that are going to be faced around the Euro and the European Union, because effectively a no vote against these changes also meant that there was this popular sentiment to potentially break away from the European Union. Now, that's going to cause some uncertainty around that union. You know, Italy is the third biggest economy inside that European Union. So for them to exit like the UK have done is going to mean the death, basically, of the European Union. But that's also going to cause political uncertainty and economic uncertainty in that particular region. It may be the death of the euro. So this is why, you know, this particular rate announcement is quite fascinating in terms of what's happening globally. We're seeing America get on a more stronger footing economically, but we're also seeing some troubles in Europe and how that affects the financial markets. And then locally, if we do have a negative GDP number tomorrow, you know, where is the impetus to actually raise rates if the economy is actually slowing down? But couple that with record household debt, and we're going to be in situations which are unfamiliar, and it's going to be very difficult to be able to navigate through this particular period. So right now, you know, this is the last rate announcement before February. So I suspect, you know, with rates on hold now, we're going to see what the spending patterns are of Australians over this Christmas period, and all forecasts are pointing to record sales over this sort of Christmas and Boxing Day sales period, and then we'll start to come out the other side and start looking at the data in February. But right now, rates on hold, reasonably uncertain times. Bond markets have turned also, which is an important story, which meant that fixed rates are also now starting to rise. And I'll leave you with this point. One thing I do believe is for sure, it's uncertain about where the cash rate will be. It's more likely, if you look at the future markets, that we will see a cash rate increase from these record low or these emergency settings. but we are definitely going to see the banks start raising rates outside of the RBA's policy. So, we've seen it already in the fixed rate market, and we'll start to see that also, that they'll be out of cycle rate rises by the banks as they argue that their cost of funding overseas has now increased, and they'll be passing those on to us borrowers. Now let's round that out in terms of the property market. It'll actually be a welcome cooling of the property market. And that's good. If we see several rate rises in 2017, it won't just cool the market, it'll correct some areas of the market. Some of those corrections will be more than likely in the outer suburbs, in the new house and land package areas, and will also put further pressure on the unit market where there's an oversupply at the moment. So, fundamentals long term are still pretty good, but I suspect we'll now start to see sentiment and confidence in the property market in 2017 start to slow around middle of the year, and we'll start to see some values declining in most markets, especially the Sydney and Melbourne market. There will be great buying opportunities during that time. Thanks for watching.